So in today's video, I've linked up with Adam and we're going to be talking about, is Forex trading rigged?
So Forex trading, I guess, can be split up in many different ways, but I think we'll first discuss ethical trading and what ethical trading actually is. So ethical trading, I would say, simply is just trading in, I guess, the guidelines that we're given and not essentially breaking out of those guidelines. And we know that price in the Forex market is moved in three different ways. It's moved in corporations holding currency in a specific bank account. For example, a Japanese currency may hold a USD bank account, as they may trade with a lot of US companies, and so having currency in this specific account is perfect for them, and that would move a market. We've also got traders, institutions, retail investors, retail traders such as ourselves, who may just trade day to day. That will also have an effect on price. And then we also have currency exchange. So for example, when you go to travel from, for example, England to United States, we would obviously have to change over our pounds into US dollars, and that would affect price. And there's actually a statistic here that actually shows that manipulation of the Forex market equates to over, I think, $11.5 billion a year. And so manipulation in the markets is a profitable business, and it does happen. And I'll let Mula explain some ways in which price is actually manipulated.
Yeah, so very good explanation on just how the market moves. And we're just going to be talking about how market moves unethically. So for example, stop loss hunting. Now, a lot of brokers, when you're trading and you place a stop loss, a lot of traders, they would place a stop loss maybe 20-30 pips, and you would see that price is actually not at your stop loss, but you've come out of the trade, you've been hit on the stop loss. And this is what the brokers do so that they can maximize their profits and their earnings. And then also another way of them making more money is spread markups, changing the spread from a little of 0.5 to even 1.5 pips on example Euro USD, or even GBP JPY, they can go up 3 pips. So that's little spread can change your stop loss. It can change your take profits. You can miss your take profit, and you're losing potential profits. So what do you think about the whole the spread movements and high leverage and just how the market moves like that?
So I guess spread movements in general do happen. I mean, when we choose to use a no commission broker, we have a spread already. But I guess a lot of brokers are regulated. They may not be FCA regulated specifically, but they may be regulated in, I guess, the company in which they operate in. And that regulation should actually be enough to, I guess, be able to spot these things. But I guess that's not always the case. And when it comes to, I guess, selecting a broker, I think it's just a part of the Forex process.
Yeah.
You decide you want to start trading. You've traded on whatever demo account you've actually chosen. You've decided that you now want to trade raw money, raw capital. You essentially need to look into your broker, what your broker's, I guess, done previously, where they're regulated. Are they regulated in your country? For example, we have the FCA. And again, I just feel like it's a part of the process.
Now, let's say I was a beginner in Forex and I'm looking for a broker. Would you recommend them to go for a broker that has an FCA regulated company, or would you just say pick any broker? Or what would you look at when you pick a broker?
Also, there are certain brokers, I mean, there are some brokers whereby you don't actually have to be 18 to open an account.
Yeah.
And those brokers in particular, what you'll find is that they're not FCA regulated, but allowing someone, I guess, not of age to have their own account, to be able to deposit, withdraw funds and trade the foreign exchange market, it shouldn't really be happening, but I guess it does. And so even if you're not of age, I would say just wait until you are, or again, have maybe a parent open an account for you. I, for example, had a friend open my first ever Forex account. But I would actually go for more FCA regulated companies, just so you know that your money's protected. And for example, if the brokerage was to go under, you would still be able to get a large portion of your funds back as per FCA regulated bank accounts. So I would say, definitely go for FCA regulated brokers.
When you are looking at a broker, you look at terms and conditions and some terms and conditions, they don't actually write about, there's different types of unethical trading, such as, slippage and even requotes. So what this basically is let's say you enter the market and you've placed an order and you're waiting for price to hit a certain point in the market. Now, what brokers could do to make sure, you either lose a lot of money or take a little bit of commission out of you is they could change your quote. They can re-quote you, and it'll be a matter of a couple pips, and you won't notice it. But when you trade, you'll realize that, if you're trading for a take profit of 20 to 30 pips, you're now seeing that you've entered pips ahead of your trade, and now you only have a 5 to 10 pip profit. So that's something that I say that, T's and C's do not show. And even with slippage as well, if you're trading and the market is very volatile, and even in the stock market, when the market is very volatile, you would see that price, when you enter, is not actually exactly at that price. Sometimes, the brokers might make you go 10 to 15 pips ahead, where the trade is either higher or in your loss. So now you're technically in a loss of 20 to 30 pips, or even 15 to 5 pips. And, the market is now against you, basically.
Yeah, so again, with slippage, it's something that we wouldn't spot.
Yeah.
We just wouldn't spot it. And I guess it's kind of a weird one. A beginner trader most definitely wouldn't spot a slippage happening. Again, with the execution price being different to the actual price which is being executed. For example, if I was looking at it from the outside in, I place a trade, I'm looking at the trade on TradingView, I have an expectation that, okay, cool, this should be the spread.
Yeah.
And then even if it's, I guess, a few pips out, I'm just going to be like, it was the spread. And there's nothing really that I can do about it.
Yeah.
So I would say, I would test different brokerages to find one that's for you. Again, the broker could be regulated, but I don't know if you've seen the scandals such as, I think it was Infonox, and there was articles written about certain traders who had actually been able to take, I think it was something like £3 million scammed from, I guess, retail investors, retail traders. And it's kind of like, this Infonox company was actually FCA regulated, or whatever it was called. And it's like, for an FCA regulated company to steal over 3 million worth of traders' capital, I mean, it's crazy. To spot something like a slippage is kind of really insignificant in comparison to having people lose millions worth of initial investments.
And it's crazy how even, the small details in Forex could affect a lot of people and their mindset on trading. Especially like, for example, when I was trading and when I first started, and I started trading overnight because it made more sense for me to not look at the market overnight. And I'd wake up and some of my profits are gone in commission as swap charges. And, brokers are doing this. And do you think that's ethical for them to take charges overnight? Where if we're in a country or no matter what country you're in, do you think it's ethical for them to charge us?
Yeah, so I have a lot of swing trades, and I've literally so I think at certain points in time, I'd be posting profits on social media, Instagram, Snapchat, etc. And I would have one trade, and below that there would be loads of red. All those moments of red would essentially just be swap charges and commission.
Yeah. And
literally every day having the overnight fees, etc., etc. It's ethical, yeah. I mean, it's business. If they didn't have these swap charges, they just wouldn't be as profitable as they currently are. And I guess different price movements, price fluctuations, they just have to, I guess, have their commissions. But I guess the details as to how they actually calculate it. And again, you could have the exact same trade with two different brokers, and you'd find that the swap charges are different. You'd find that the commissions are actually different. And so it's how they actually calculate this, which I would find is, okay, cool. When do we actually spill into being unethical? And how do we actually define that, okay, cool, this is ethical, this is business, but it spilling into unethical is just a really thin line. And I believe that, I guess, us as traders, we should be given, I guess, cool, you hold out overnight trades, you have, for example, this lot size, you're placing this position, this should be sort of the commission that you'd be charged daily. And again, I guess it may be hard to calculate with certain price movements in the market. But it's just something that, again, I feel like there's such a thin line into deciding whether Forex is rigged or whether Forex is something that is just happening naturally in the economy with, I guess, natural price movements.
So moving on to the point, should beginner traders, or when you started trading, did you actually look at these charges and, see the manipulations? Did you actually focus on that?
So when I first started out trading, obviously I started out with a mixture of day trading all the way up to swing trading. And I didn't actually realize that I was being charged with commissions until they'd actually happened, until I'd sort of open up my brokerage account. There'd be a trade, £1,000 profit, and then just loads of negative transactions, all of the overnight charges, commissions, etc. So I was hit with them. Was it something that I'd ever considered or worried about? Absolutely not. Even to this day, I don't. I'd first started off on an FCA regulated broker, and I've continued to trade on an FCA regulated broker since, and never really had any considerations changing. I do trade on multiple different brokerages. I'm with multiple different brokers.
Yeah.
For a beginner trader, I wouldn't actually recommend them actually worrying about this. I feel like there's way too much going on in the general economy and in the Forex market. Having to worry about the overall market structure, the price action, just the economy in general is already too much to handle. And as well as sort of being able to master your Forex skill and your ability to actually trade, having to worry about different types of, I guess, requotes, different types of stop hunting techniques that could be happening on the broker's end of the system. I feel like it's just too much to actually try to comprehend. And so I wouldn't sort of have them having this issue at the forefront of their mind, but definitely having it as a consideration that if they do want to trade on two different brokerages to see if they could be more profitable long term on one, it would definitely make sense. I mean, if we treat trading as a business, and every time you hit with a swap charge, it's kind of like, okay, cool, it might be like a little £3 charge on the actual transaction. But if they were to then sort of move over to a different broker whereby the swap charge is then halved, long term, all of those different, I guess, fees would then add up. But again, I just don't think it's something of consideration. Your profits would be way more than the stop charges. So having to factor it in, it's just something that I wouldn't really
if
consider.
you are a beginner and you are fearing over these, swap charges and, high liquidity in the market or, a volatile market, I wouldn't recommend trading when the market opens straight away. I've seen a lot of traders, they would see the market and because of, fear of missing out, they would enter the market straight away as soon as, 10 p.m. on a Sunday they want to enter, or as soon as the market opens throughout the day, they want to enter. And it's like, I feel like if you just give it a breathing space, just see what the market is saying. Price is very volatile when the market opens. It doesn't know what it's doing. Spreads are crazy. I think, 30 pip spreads on just Euro USD. So I wouldn't recommend, trading when the market opens, whereas, you can just wait until Monday. So for example, like me, I'm a day trader where I would wait until Monday afternoon or Monday morning UK time for me to actually be placing a trade. And then if I do hold it for the day or for the next day, I know that I will be hit with these swap charges. But I'm more focused on my profit rather than this, minor, maybe £2 commission charge. And to be honest, you've got to realize that brokers do have to make their money some way. And, we are we're retail traders where we are making our profits. So somehow the broker will have to make some profits.
Of course, agreed. And I feel like the reason why these charges, I guess, hit the mainstream is because they're so insignificant. But think about the amount of traders and some of these trading accounts. Certain people are trading with millions, hundreds of thousands, and so their swap charges may be £5-10 a transaction, and making, I guess, 60 transactions a day plus. And these mixed in with, I guess, the spread of the market, it's going to add up. So then brokers are making tens of thousands, hundreds of thousands per day just with these charges alone. And so I think when this hits the mainstream media, and the mainstream media is like, oh, okay, cool, you guys are actually, I guess, stealing hundreds of thousands unethically when it shouldn't be happening. I believe it's just something that's, I guess, looked at in a lot of detail, probably even more detail than what it should be looked at. So then mixing this in with, I guess, when you would advise traders to trade within the day, I feel like, again, a trader should more or less just avoid market open. Initially, yes, because there's just going to be an eagerness to actually place a trade. But then what you might find is that for the specific pairs that you've chosen to actually trade on, you might find that, okay, cool, trading at market open is for you. But again, this is something that needs to be tested in line with your strategy, in line with your currency pairs. And then with this, you'll then be able to gather when is best for you to trade. And it shouldn't really be something that should be taken generally, but more personal to you and to your situation. But again, try to avoid that eagerness to just place a trade, whether you've just finished work, just came out the shower. Try not to place a trade initially, but again, take a step back and just be like, okay, cool, is this the right time to trade? Does my technical analysis add up to make sense of you placing the trade? And again, backtest and see, okay, cool, does it make sense for me to trade at this time? If not, don't do it. If yes, then again, feel free to place your trade.
Yeah, because a lot of traders, they always have that fear of missing out, and it's crazy because I've seen this this quote where it was like, if traders just put their hands in their pockets, they wouldn't lose as much money.
Agreed.
And I think that's more directed onto scalpers, because scalpers, they'll be trading every second of the day and they'll be hitting 100 trades, and for them to be getting swap charges or just commission out of every single trade that they take, would that make sense for them to be a scalper? Would you recommend a beginner to day trade or swing trade?
Yeah, a beginner, whatever suits them,
Yeah.
whatever they've actually backtested. Because even so, the swap charges or commissions, I don't think they would get
It'd
too
be
many
very
swap
small,
charges, but
yeah.
yeah, the commissions that they would take wouldn't be significant at all in comparison to how much they trade. Again, the broker or certain brokers want you to actually make money and will help you, will educate you, whereas others just won't. And so, yeah, beginners, again, just whatever suits them. Me personally, I don't think scalping is for me. I feel like you need a lot of high leverage, and high leverage is probably the quickest way to actually leave the markets. Putting more money on the table, betting more money on certain price movements, again, it's very risky. But for me, I'm more than happy with swing trading, to be fair.
So this brings me to the last point is, do you think brokers are against us?
So, do I think so? Being a broker is essentially a business. Businesses need to turn over a profit, so all the charges, etc., that we're faced with being a forex trader have to happen. They have to happen for our brokers to be happy, for everyone to get paid, etc. Do I think that they're against us? I would say no. From my experience, I've used FCA regulated brokers, and I've been with FCA regulated brokers from the very beginning. And my experience with forex trading has been perfect. I've never really had any broker issues, etc., etc. My brokers try to educate us. We have different types of webinars. We have loads of different tools that are available to us to actually be able to learn forex free of charge, and be able to turn over a profit. What I do believe is that there are certain brokers out there which don't have your best intentions at heart. There are brokers which may have programs whereby somebody as young as us, 19 years old, can actually sign up to a program, and they would get a hefty commission for you signing up to a non-regulated broker that is offshore, that isn't based in the UK or surrounding areas, that has no regulation whatsoever, or they've paid for some type of sort of sketchy regulation to actually set up, and that's your money gone. I mean, there's tons of articles about this. You can literally type in Forex Scams UK, and you can read about all the stories that have been heard of, whereby somebody as young as us, 19 years old, has advised people to sign up to this broker, start trading, and they've lost thousands, tens of thousands, potentially even hundreds of thousands at times.
Yeah, and just going on to the Forex scams and stuff. There's a lot of people out there that are portraying Forex very negatively, such as, MLMs, people getting commission out of, sharing their broker. And, what's your opinion on the whole, making commission out of Forex?
It depends on your intentions. Most people's intentions are just to turn over a profit. And so for those types of people, let's say, for example, I'm a new trader. I'm trying to get into the Forex market. I come to you, and you're like, okay, cool. My advice is that when this candlestick does this and this candlestick does that, you should place a sell order, for example. You could look at a chart and find that exact pattern happening, and I would be like, oh wow, I trust you now. And because 100%. My knowledge is I'm so new to the Forex market, because I'm market, I'm going to believe whatever you tell me, and as long as you can prove that to me on a chart, I'm then going to believe you. And I believe that it's new traders sort of being taken advantage of in a very unethical way, whereby it's like, it makes Forex seem like a scam. For example, you've got IML who are like, do you know what, everyone needs to be a Forex trader. If you don't, it's your own fault in life. You've got no money, you're a uni student, you're in debt. It's your own fault. You need to join IML, recruit your friends, family, get them all to jump on, and you're going to be P500, P60,000, and you're going to be a millionaire within a year. And that's what's unethical about Forex. It's not Forex, it's what people do with Forex. 100%. So people will take it, for example, they'll take the concept of Forex and the idea of being able to make quick money, your phone is an ATM, whatever kind of...
Wi-Fi money.
Exactly, whatever kind of weird sort of things they want to do with Forex. And it's them kind of manipulating it and making it a scam. So it's actually the marketers. It's actually the multi-level marketing schemes such as IML and the people within the company. And for them, they're making money extremely easy. I've seen the types of money that they make.
100%.
And it's ridiculous.
Because I was in IML, and like I said before, it was the way I'm trading now to when I was in IML. It's huge differences. Huge. Like I'm telling you, from the point where you can learn what IML teaches you, or any MLM scheme, what they teach you is something that's on baby pips, you know, something that's
Exactly.
online for free, and people
Yeah.
are paying, you know, £300-400 for something that's can be taught on, you know, the baby pips. Whereas, you know, I've got an academy myself where I'm teaching forex from beginner level, which is on baby pips, but I go more in depth and I give you my experiences, and it's personalized to me. So that's what differentiates from, you know, certain people's academies. Whereas, you know, you go into an academy where they're telling you to recruit, you know, 3 people, and they recruit 3 people, and the cycle goes on to a point where you're just making a lot of commission, and you're basically saying that's how forex is paying you. Whereas I wouldn't say forex is paying you like that. That's more of the marketing and, you know, the advertisement that you're doing, and that's how you're getting paid. It's more like forex is more where you're in the market, you're buying and selling currency pairs, or you're trading. So it's like you're getting one product, or you're giving a product to return a product, and that's how what trading is. You know, so it's like, you know, I've got a currency such as GBP, I will trade it and return, I'll get USD. And then once I make profit, I return the USD, and in return, I'll make GBP. I'll get GBP back. And that's what trading is. There's nothing, you know, scam related to it.
Yeah.
And if banks are doing it, and, you know, if you do see that people are, you know, messaging you saying we've got, you know, harmonics, or we've got an indicator that's the perfect, you know, 80% win rate, think of it this way. If it was 80%, wouldn't the banks buy it? They're the most heavily traded institution, right? They trade on a regular basis. If they had an 80% win rate, wouldn't banks trade it?
I just
use
don't
it?
think a profitable trader would approach you. It's just
100%,
not worth their
yeah,
time. Like,
exactly.
for me, I don't reach out to people. Just in general, I find it quite hard to reply to all of the messages that I get in.
Yeah.
And so that was what actually led me to start a YouTube channel. It was
Exactly,
easy to get
yeah.
out to everyone and to share my message to everyone who was actually interested.
Yeah.
And it's like, okay, cool. I have a, I don't know, a broker, for example. Am I going to reach out to you to join my broker so that you can make money, somebody that's never traded Forex before, something that's extremely risky? Forex is probably the easiest way to make, well, it's easy accessible, but it's easy accessible, and it's also like an extremely hard skill to pick up.
Yeah.
And so the two just don't really match as much as they should.
Yeah.
But that's the reality of it. And I believe that most people, Forex trading probably isn't for them, in all honesty, for the majority of people. But then for the small percentage of people that are, again, if they actually learn to understand it and become profitable, reaching out to other people just isn't something that would then be worth your time. It really isn't.
So just in conclusion of this whole video of us talking about, is Forex rigged? And as you can tell, like, our opinions are against this whole, you know, Forex being rigged. And, you know, am I wrong to say that? Or
no, I agree. Forex is not rigged at all whatsoever. The actual Forex market is perfect. You can get sketchy brokers. You can get, I guess, market manipulation, and it's all a part of the game. Think about a business, for example. I'm a business. I sell a product. You receive the product after purchasing, and you do a chargeback on that product. That's fraud. Fraud happens. But it's just a part of the process, and we can never really account for that. We can never really expect for it to happen. But overall, I would say no, Forex trading isn't rigged, but I guess there are the people in the back end who are extremely sketchy, who come across as
is the third party, I'll say it's
people.
third party Forex traders or institutions or
But
businesses.
are they even Forex traders?
You know, when I was in IML, I didn't see any single Forex trader. You
So
know,
they
a lot
were
of them
purely just marketers.
Just marketers, and, you know, every time they did show me a account, most likely demo, or they've edited it or something. I just believe, you know, if you're a Forex trader, for example, like me, I'm a Forex trader, and I don't need your money to make money.
Exactly.
Like, I have my own equity, I've made my own money, I've got my own strategy. I don't need someone else's money for me to then, you know, show off and say, you know, I've made money and I've got these students. Like, that's why I've also had a one-time payment for my academy, because I don't need the people's money. What I need is, I want to grow a community of traders where we're all trading on the, you know, the same level, and we're all maximizing our profits.
That makes perfect sense.
And just going on to, you know, profits and, you know, losses, Adam, you've got something where you're covering losses, aren't you?
Yeah, okay, cool. So I guess that leads us on to the giveaway. So what we want to do is actually, I guess, a giveaway for anyone watching who's actually made it to, I guess, this part of the video. I assume it to be a long video. But yeah, what we've actually decided is we're going to do a giveaway. In talking about the topic of, I guess, ethical brokers or ethical trading, talking about, I guess, non-regulated brokers, etc., etc., We're actually going to pick how many people?
I would say, okay, so like this video, subscribe to both of us, and comment done on both of our channels. And I would say 5 people. So
5 people. Okay, cool. So we'll pick roughly 5 people, maybe more, most definitely not less, but we'll pick 5 people at a minimum. Take them on board. We will, hopefully you guys will, in fact, we want people who are, I guess, sort of educated in the very, very basics of Forex. But if you're at a position whereby you're ready to trade, that's perfect. We'll take you on board. Make sure that you are on an FCA regulated broker so you don't lose any of your money. And we will actually cover your losses, making Forex risk-free. And I hate saying that it's risk-free, but essentially you will lose money, so you will take a risk, but then we will take on that risk for you. So we will cover your losses, making it then actually risk-free trading. Not anything sketchy whereby we've got a 100% win rate. You're not going to be following our trades. You're going to be placing your own trades. And we will simply just cover any losses that you incur over a fixed period, let's say a month. So again, follow. We'll have, again, all of the guidelines, requirements in the description below. So just refer to those. There may be a few additional, I guess, requirements to actually jump on board. And we'll pick 5 people at random. Again, because we don't actually know the release of this video, check the description. We will actually announce in the description when the video will be released. Or when the announcement will be released as to the people's losses that we're covering, and then you guys will see and know who's actually getting their losses covered. So thank you for watching this video. Please like, comment and subscribe, and I guess we'll see you next time.